All right, let's dive right into this explainer and look at a pretty wild phenomenon. Why some of the biggest, most hyped companies in history have literally lost billions of dollars simply by ignoring the least glamorous part of running a business. Think about some of those massive corporate implosions we've seen over the last decade. You know, those unicorns that went from multi-billion-dollar valuations straight to bankruptcy in a matter of weeks. It's crazy. When we think of huge corporate success, our minds almost immediately jump to the fun stuff. Viral marketing campaigns, disruptive products, visionary founders. We almost never think about compliance. I mean, let's be honest, it's not exactly exciting, right? It definitely doesn't generate flashy headlines. But beneath every single corporate empire, there is an invisible system keeping it alive. Without it, companies don't just stall out, they collapse entirely. And not because they couldn't generate revenue, but because they completely failed to follow the rules of the game. To really wrap our heads around why this happens, imagine stepping onto a field to play a sport, but you have absolutely no idea what the rules are. What actually happens in that scenario? Well, you might score for a little while, you might even outplay the competition and feel like you're totally dominating the field, but eventually, the referee blows the whistle and the game stops cold. Ignoring the rules completely nullifies every single point you thought you were scoring. And that leads us to our first core concept, the invisible business foundation.
Because business works the exact same way as that sport. Every market you can think of operates within a strict framework of laws, regulations, and standards. And it's absolutely crucial to realize that these rules aren't just there to be annoying roadblocks. They exist to create the absolute core currency of any economy, which is trust. Trust is the foundation of survival. It's fascinating to look at the stark contrast between what we see every day and what actually matters behind the scenes. On one side, you have the visible company, the sleek products, the clever ads, the charismatic founders. That's the glamorous side everyone celebrates. But on the other side is the invisible system. We're talking taxes, data protection, audits, risk management protocols. As customers, we almost never see this stuff. But you know who does? Investors, regulators, and governments. For sure. When a massive institutional investor is getting ready to write a $100 million check, they aren't just stared at the slick product. They are doing incredibly deep due diligence on that invisible machinery, because that machinery is exactly what dictates whether the company will actually survive the long haul.
So what happens when things start moving fast? Let's look at section 2, when growth creates complexity. Here's the thing. A small business can actually get away with operating pretty informally for a little bit. The founder probably knows every single employee, every customer, every transaction. It's a scrappy, tight-knit setup. But as the company starts to scale, that exact same informality suddenly becomes a massive vulnerability. The complexity stacks up incredibly fast. Think about the steps. Step 1, you add more employees. Bam, suddenly you're dealing with payroll taxes across different jurisdictions, healthcare mandates, and complex labor laws. Step 2, you bring on more suppliers. Now you've got third-party risk, supply chain compliance, and international trade tariffs to juggle. Step 3, you reach more customers. Awesome, right? Except now you're handling massive amounts of sensitive personal data that requires strict privacy protections. And step 4 is the unavoidable consequence of all of that: more regulations. Every single new person or process you add multiplies the rules you have to follow. Basically, what worked perfectly fine in a garage will suddenly and violently break under the pressure of real expansion. So it boils down to this: growth without structure creates risk. Pushing for fast, aggressive growth without simultaneously upgrading those invisible compliance structures, that turns a theoretical risk into an incredibly expensive reality. It's exactly like trying to build a massive skyscraper on a foundation poured for a single-family home. You can keep adding floors, and it might look incredibly impressive from the outside for a while, but at some point, the sheer weight of your own success becomes your biggest threat. The foundation cracks, and the entire building comes crashing down. Which brings us to a major shift in perspective in Section 3. Compliance is actually about trust. We really have to fundamentally reframe this whole topic. Compliance is not about tedious paperwork. It is entirely about the human concept of trust. A lot of entrepreneurs kind of roll their eyes at compliance because they just see bureaucratic red tape. But at its core, compliance is the language of confidence in the business world. Just think about the key stakeholders and their expectations. Governments need to trust that taxes are paid accurately. If they don't, they freeze your assets. Employees need to trust that labor laws are respected. If not, you're looking at catastrophic strikes or class action lawsuits. Customers need absolute trust that their personal data is secure. I mean, we've all seen massive tech platforms lose billions in market cap over a single data breach, right? And investors require the absolute trust that your financials are completely accurate. Every single major stakeholder relies on these specific measures to build the confidence they need to keep engaging with your business. But what happens when that trust evaporates? Let's check out Section 4,
The price of breaking rules.
We've established that compliance creates confidence, and confidence attracts opportunity. But what actually happens when that trust is broken by just one missing document or a single seemingly minor regulatory violation? It comes down to a really stark reality: years to build, days to lose. History is absolutely full of companies that focused aggressively on top-line growth but completely neglected governance. Just think of some of the most spectacular corporate frauds or those massive crypto exchange collapses we've seen recently. They poured literally all their energy into the visible company, the stadium naming rights, the celebrity endorsements, the Super Bowl ads, and completely ignored the invisible system required to actually support that growth. Basic accounting practices and risk management were practically non-existent. And because of that, they lost a hard-earned reputation almost overnight, evaporating billions of dollars in customer funds. The fallout for ignoring the rules is rapid, and it is brutal. It's like a domino effect. It usually starts with fines. A regulatory body notices an anomaly, and bam, a penalty is levied. Then come the lawsuits, as shareholders and customers realize they've been exposed to risk. That triggers massive, time-consuming investigations by federal or even international authorities, which, of course, immediately results in the loss of customer trust, causing revenue to just plummet as people pull their business. And in the worst cases, it leads to complete collapse. This isn't just some theoretical chain of events. This is a highly predictable pattern. We've seen it repeat itself across industries, destroying businesses that frankly thought they were too fast, too innovative, or just too big to care about governance. So, how do we avoid that fate? Let's look at our final section, the mindset for survival. The absolute smartest business leaders in the world do not look at compliance as just another annoying expense. They don't sit around asking, how little compliance can we get away with? Instead, they ask a much more powerful question: what massive risks are we creating by ignoring this? They treat it as a foundational element of their strategy. I absolutely love this mindset. Think of compliance as the seatbelt of business. You hope you never need it, but man, you'll be incredibly grateful it's there when something goes wrong. It's your insurance policy. It's your ultimate protection against preventable, business-ending mistakes. And ultimately, embracing that mindset leads to a really empowering truth. Predictability creates trust, and trust creates opportunities. Doing things by the book doesn't limit your business. It actually enables growth. It's a massive competitive advantage. When your compliance systems are rock solid, you prove to banks, to sophisticated investors, and to major corporate partners that you are a safe bet. Imagine a private equity firm opening your data room doing an acquisition. They are looking for predictability. If your books are clean, your data is secure, and your regulatory filings are perfect, your valuation naturally goes up. The absolute easiest way to attract capital and long-term customers is to show them a structured, predictable, and fully compliant operation. To wrap up this explainer, I want to leave you with this final thought. Success isn't just about how fast you grow. It's about how long you stay standing. The businesses that ultimately survive and dominate their industries over decades aren't always the most aggressive out of the gate. They are the ones that respect the invisible rules of the game. So the next time you're evaluating a business or even building your own, ask yourself this: are they just optimizing for rapid speed today, or have they actually built the invisible system required to survive tomorrow?